Alright, good morning, bro. I heard your questions and you were asking if fair value gaps are not meant to be a three candlestick movement in the same line or the same direction. So actually, it can actually start with the first candlestick creating that trend is about to go in before moving up. Let's just say we have a scenario like this here. You can see this red pin bar here. This one as the first candlestick, this red one as the first candlestick, the second one, and the third one. But now in this three candlestick price action, there is no gap here unless we have the fourth candlestick. So for here now, this one will have to do it 1, 2, 3 in this direction, making this gap here our fair value gap here. So most times it doesn't really have to start with the the last candlestick that is about to begin a new movement. But yeah, if you see something here, we have price to start with this other one, with this other pin bar. So it depends on where you're seeing the gap. Just identify the gap. To me, the candlestick doesn't really matter. If I should take it down here, you see that this bullish candlestick here, the green one, is actually the first candlestick, and this second one is the second candlestick, then this third one. Now these are the three candlestick movements here. So imagine you're looking at this first candle, second candle, and the third candlestick. There is no gap in between the first and the third one. So it's actually this one that is the first candlestick and this one that is the third candlestick, and you can see the gap. See the way price came back to it and went down a little bit. Then for the Ifvg we were talking about, Ifvg is when I was just telling you what an Ifvg is. I did not really explain the total concept or the total video. Now Ifvg is when you have a fair value gap to a particular place and it's being broken. Now when it's being broken, normally a fair value gap is supposed to be mitigated like this, come and trade like this. But for an instance where price trade above the fair value gap with an impulsive move, it creates an Ifvg because it's now have to leave a gap again at directly the opposite side. So this would have been a perfect example, but this one would have been a perfect example. But let's see if I can check it in 15 minutes here. This one was almost a perfect example, but it's not really complete because of this retracement into it here. This is a bullish fair value gap. So here it's supposed to come down and continue going up. Like price is supposed to continue going up from this level here after this retracement, but price later came down. But you will see this retracement now I've already filled this gap. So if there was nothing to be here now, it would have just retraced down and price would have just retraced back into the Ifvg. But since this one already got filled inside here, it created a fair value gap at the other hand, and if you see price also went back to this Fvg here. Price also went back to this Fvg here and started selling. So let me look for a perfect example here to show you the Ifvg. Okay, I have another perfect example here. Just like I said, in this three candlestick, you can see this is a gap here. This is a gap here, and if you were trading bullish, you would have been expecting price to retrace to this level here, to this level here, to this gap, and continue going up. But we had a momentum coming down. We had a momentum coming down here, which made these two gaps to be formed directly opposite, which is now causing an inversion fair value gap here. Look at it. We were actually trading bullish. You will see here is a break or shift in market structure. So we want to see price come to an imbalance here and continue going up. But price came down with the same momentum, creating an imbalance on the both sides, which is called an inversion fair value gap because it has an inversion fair value gap to the direct opposite side. One, count your first candle, second candle, and your third candle. You have your first candle, second candle. You can just see what I was trying to explain. So now, because we have it to be, because it's actually breaking structure down here, it's not going to be a bearish inversion fair value gap, because when the inversion gap happened, it went down continuously because we were having a bullish fair value gap. Instead of respecting the bullish fair value gap, it came down and created a break of structure, leaving you with a bearish inversion fair value gap. And like I said, you'll be expecting price to retrace down to a bearish inversion fair value gap so you can actually continue selling, because that would not be your next point of interest. So imagine you have here to be your point of interest. Now this is where price was supposed to actually come back to the inversion fair value gap, but for some reason it did not really come back to it. But if you keep going with time you will see something that with time price actually came back to respect the inversion fair value gap, and it dropped. So now it actually filled the inversion fair value gap and it went down. So that's just it. So imagine you still had your limit order here, price actually came back to the inversion fair value gap, filling up to 50% of it before dropping down. Then it continued again. So that's just how it is, because all these things are what works in the market. So that's just the answer to what you answered. So to what you asked, the inversion fair value gap are the unmitigated areas in the market. It formed from a FVG that is unmitigated with a momentum, like I explained here. That's just the difference between IFVG and FVG, so it's not much. Alright guys, good evening. I thought I should share this with you guys because it's something that actually confused me, and if it's confusing to me, then I believe it should be also confusing to you. So I talked about FVGs and IFVGs in the market, and aside talking about them in the market, how can you take trades with them? That's what is more important. So this is Euro USD, and I just came to my chart today. I was just feeling like to do something, trade something. So just from with the lectures I taught you guys, you'll be able to identify that this is a FVG. Yeah? You have your first candlestick, your second candlestick, and your third candlestick, and you can see the gap in between the first and the third one, which I always put this rectangle box to receive price down. And for the first part here, this place was supposed to come into this area to mitigate this gap, but instead it left the gap and it rallied up, it pushed up. So later on in the future, you see what price is this on a higher time frame. Price went up and went up and went up down to this other level. So normally from the lectures I gave you guys, what you're supposed to do is to wait for your POI, which is the imbalance around here. But for me, due to the fact that I know what I'm doing, I was able to get an entry. But let me explain why I ignored this box and why I was able to get this box as an entry. Now let's go down to the 1 hour, because I always advise you should start from the higher time frame, because the higher time frame gives you like the high probability setups here, the one that tend not to fail because it's actually being seen on a higher view or higher perspective. So if you go down to the 1 hour, you're going to see something. Now the most recent imbalance before this one, which is the higher time frame, which we are not going to ignore. Okay, you see that we have an imbalance here on the 1 hour time frame. This is an imbalance, this brown line here, that first, second, and the third candlestick. And you see that price came in to fill up the imbalance, and it went up here, creating a breakout structure at this level, and it continued going up, and it went up down to this level. I made price around this level here, this candlestick. Now everybody will always look at this level to be a potential POI, which I'm not still doubting that price is going to come here. Now why do you say here will be potential POI? If you look, these are series of lows where you have liquidity here, and it is now going to be tapping into the 4 hour point of interest, which will now be this imbalance. So price is supposed to sweep liquidity and come in here. So that's what you'll be waiting for. But today I was able to get this entry even when I met price around here, around this level. Let's go back to 1 hour and why I ignored this level. I will explain in this video. So you see, I met price around this level here, around this box here, around this level here. So I draw this line. Now there are two things involved in this video. I was seeing two things, and I know that you guys might see the same thing, and I want to do this video because of the sake of you guys. Now look at something here. I had a 2 point of interest, the bearish and the bullish side. Now I had here to be a IFVG. Remember what I said in the video, when you have a 3 candlestick formation and you have a gap directly opposite each other. So I wanted to start selling from this level. I wanted to start selling, not buying, but I bought instead. Now when I was doing my analysis here, I wanted to see this price close below this low. If price should close below this low, we have a break of structure to the downside, then this zone is going to get respected. That this will not be my next point of interest, because for now, if you look at it, we are going up. So if price should break here, we are going to have a shift in market structure. Then the possible POI is going to be this box, which will be the inversion bearish fair value gap. But this is what price did. Price took out liquidity. So price did not close that below this low with its candlestick body. So this level is now invalid because this is still a bullish move, as price did not close below here. If price have closed below this low, then we'll have here to be a bearish inversion fair value gap to the both side here. So that was why I ignored this gap. So imagine you seeing this in the market and you're also seeing this, so you might be expecting price to retrace down to here as to sell to your overall to your overall liquidity level, and you might lose that trade. So that's something I wanted to show you guys, that here was now a liquidity. I know I've not taught you guys liquidity, I'll be teaching liquidity next in the class. So since price did not break this low, we cannot confirm the market has shifted to a bearish move. So it actually took out liquidity, and you see, when I'll teach you the liquidity class, I'm going to tell you properties and features of price action when you sweep a liquidity and how you should know. And I also said that the recent FVG, the fair value gap, was already mitigated. So if this gap was mitigated, we don't have any imbalance around this level. the whole of this level that price is coming to correct if this one was mitigated. So if price is actually going to come, it's actually going to come down to this low, which is liquidity, and on 4 hours is a imbalance Fvg. So what I want to say was that price should break below here to confirm that is a bearish market, like a shift in market structure, then retrace to this point here and sell down to this low, but that did not happen. So I just made that we are going to continue bullish. That was what I did here. So on the 1 hour we have a sweep of liquidity. What do you look for in your point of interest? You look for a shift in market structure. So I had to remove this. Was no longer selling again. I had to remove this, then go down to 5 minutes. Okay, 5 minutes, or you can go as low as 1 minute, so you can get a good entry. So that's 5 minutes. This is the last low. This is your last low. Then any shift you'll be having will be around this level here. So you can see where the shift happened here. Although this one was kind of tricky, some days price will not give you a good or a very obvious shift in market structure. So this one was more like price sweeping liquidity and dropping down to take out this liquidity. But you can see how price respected this low, it did not take out the stop loss, and you can see it's heading for the previous high, which is the next liquidity, which is this one. This is where I have my first take profits here, guys. So that's just how I got this setup. So I just wanted to clear the air, just in case you find something like this where you have an inversion fair value gap. You just want to see price take out this low. Let's just say this is the inversion fair value gap here. This is the inversion fair value gap, and you don't know what to do. You have an inversion fair value gap. What will make you know that this inversion fair value gap is going to hold is this, if it should break this low. I think I gave one example. Let me check. I'll come back. Let me check for the example. Okay, if you see here, so we have another inversion fair value gap, but what happened was that price did not break lower, so we cannot confirm that this is a bearish inversion fair value gap if this price doesn't trade below this point to give you a bearish market. Like if price doesn't trade below here as to give you a break of structure bearish, then we cannot call this a bearish inversion fair value gap. Price actually continued from this level here, so because we did not break the last low, this place cannot be your point of interest. So that's just it. Let me see if I can see a perfect inversion fair value gap, a bearish inversion fair value gap here. Okay, here we have a good example. Although price never came back to this level, you see we have that this is the inversion fair value gap. And why is it a good one? Because it's a bearish inversion fair value gap, because price broke this low, causing a break of structure to the downside. So we have this to be a point of interest, and you see price does not obey the PY 100% time. So you see how price tried to retrace down to the inversion fair value gap after the shift or the break of structure. Price tried to retrace into the gap, but it couldn't get down to the gap. Let me check for another level there. Okay, you see what I'm saying, guys? This is a very sweet one here. You see this is an inversion fair value gap here. Price tried to trade to this Fvg, just from what I said in the class here. When price tried to trade back into an Fvg, but it breaks it now with an impulsive move, so it's not creating an inversion fair value gap. And because there's a break of structure happening to the downside, like we have a break of structure happening to this downside here. This is a break of structure, and it's a very good one. It's happening to this downside. What will not happen? Price is expected to come back to the inversion fair value gap in the nearest future, which it did here. You can see how price rallied after creating several break of structure. So this is something that is also going to give you like a confidence, a boost in confidence, because you have several break of structure to the downside. So this is now a bearish inversion fair value gap, which is your PY, and you're going to want to sell from here. And when you come down to this place, like I always say, check around the 5 minutes, 1 minute, or a shift in market structure before you can start selling. So that's just what I have here. This should be a bullish inversion fair value gap here. This is the fair value gap, inversion fair value gap, a bullish inversion fair value gap. If you want to trace it now, I don't know if price ever came down there, but you see how price is trying to reach onto this inversion fair value gap. Price is actually trying its best to reach it, but it did not really get to it before going up. And now this is what we have here. Okay, this gap is skipped. It skipped this gap. Now this is what I was looking at, guys, too. If you check on the 4 hours also, okay, I think that was on the 1 hour I saw it. What time frame did I perfectly see this gap? 4 hours is not very okay. This is a 4 hour time frame where I had my Fvg. This is also a Fvg here. The one that price ignored. This is a Fvg price ignored. Sorry, this video is not taking too long from one explanation to another. So I had here to be my point of interest, but you can see what price did here. Price broke this gap, this Fvg, so it's now an inversion fair value gap. So how do I know it's going to be a bearish inversion fair value gap? Is when I have a break of structure to the downside. So a break of structure would mean that price will actually break this low, this very low here now. So if price should close below this low, sorry for this mistake here. If price should break this low a little bit more, then I'll be expecting price to retrace down to this level. So if I go to the 30 minutes, I want to have a break of structure. This is not a break of structure, so price can actually move up here and break the inversion fair value gap. This is very correct. But if I should have a break of structure down very well down here, then I'll be wanting to sell from this place, this inversion fair value gap. So that's just what I've been trying to explain, and I'm taking. So that's just what I've been trying to explain throughout this video. So that's just it on the example. So it's actually a trade I took today. This is 6 p.m. and it's something I used to trade. So I just want you guys to see how it's being done, and especially for the Euro USD. This is a 4-hour Fvg. See, this one is the trade I took on the 4 hours Fvg here. After a confirmation, I took my trade. Then you check the EU. That's Euro USD. But I told you why and how this was manipulative and confusing. So that will be all for now, guys. I'll continue on in the next lecture where I'll have to talk about the directional bias, which is quite easy too. Alright, so just watch this one and ask any more questions if you have. Alright guys, welcome back to my channel, and today I just want to do like a continuation on the fair value gaps, and this is a live trade here running, a live analysis running on how I got this trade here, how I took this trade from this very level. And before I go into the main talk of the day, which is the fair value gaps, I want to say something here. So in the previous video I did, showing you how I got my entry around here and why I did not sell around this inversion fair value gap. There's this inversion fair value gap on the 1 hour. This was the gap here. So I was trying to explain in the previous video why I did not sell around this level here, and in today's video I'm actually selling. You know why I actually bought from this level down to this old high here, although price did not completely take out the old high. But let's just go into the the talk of the day, which is why I'm actually selling today, because I bought yesterday around this level. And why am I selling today? So still on the fair value gap topic, still on fair value gap here. So I saw that price did something I liked yesterday. So yesterday I see something which I might like to rephrase, which was, if we should see price break below this low, it means we have a shift in market structure. But price actually swept liquidity from this level here. So that was why I bought from this level down to this other high. So price did not actually break here or close with its candlestick body. So it closed with its shadow, showing you that that's a sign of a sweep in market structure. And if you look at here, I said on the 4 hours we have the overall PY, which is a fair value gap here. This is our fair value gap on the overall PY, and we have this yellow line to be our liquidity. You check it on the 1 hour, it's very visible. So that's where I was actually aiming to be my take profit, where we have liquidities, and you can see liquidity before the fair value gap. So price is actually coming down from this level to take out liquidity before the fair value gap and continue up. That was actually what I said in the previous video. If you've seen the video, you know that everything I said is actually in line, is actually working out. So now today's video, after this price traded down to this old high, here, let's see. So price traded into this old high, yeah, where I closed some other position. I took the trade from here down to this old high. I was expecting to take out this old high, but this is something that happened there. You check on the 4 hours, you see that price already swept liquidity. Let me zoom it out. So I try to zoom. See that this old high here. Okay, I want you guys to see that this is the last high. Price already swept liquidity mainly before it dropped down, then pushing up. So I felt like there's no other liquidity price was going to take again up here, because it swept this old high. So that was one of the main reasons price could not really push for that, because there was no other liquidity. There was not much liquidity around this high. So price just bounced back from here. Maybe there was another block on the 1 hour or something there. Check on the 1 hour, you have another block or something. So price just bounced back, and this is what is more interesting here, guys. So as price came down with an impulsive move here, showing you that we are about to go down. Now in the previous video I told you guys that we have an overall PY on the 4 hours. So if you check on the previous video, like I said, you'll see that I said everything there, and what I was actually anticipating is actually coming in play. So as price broke down here on the 1 hour, it was actually a confusing setup, guys. I won't lie to you, because based on my teachings yesterday, I said that if price doesn't close below here with its body, let me delete this and try to impute a new one. I was skeptical because I was thinking this is a sweeping liquidity here on the 1 hour, not a break of structure, just like this one happened. So should I be buying or should I be shorting? So it was a kind of confusing question, but I went down to 15 minutes, guys. I went down to 15 minutes. Let's go down to 15 minutes. And if you see something here, 15 minutes, we have to, I saw this impulsive candlestick here and this imbalance. Then look at here, to on the 15 minutes. Are you seeing the difference here? On the 15 minutes, guys, this is still a sweeping liquidity. Price never came back here and closed with its body. So this is a sweeping liquidity too. So this was more reason why I actually bought instead. Because from the 15 to the 1 hour, you see that we still have a sweeping liquidity, not a break of structure. This was when price shifted and came down to take out liquidity below these lows. That's why you have the candlestick body come down. But you see, it respected this low, which was my former stop loss limit. So when I saw that on the 15 minutes, we have a good price action here, a good bearish price action, breaking structure to this down part here, breaking structure to this down part here, and it closed very well. So I knew that we were ready to short, and I saw that we have this fair value gap here. Sorry guys. So I knew that we had this fair value gap after a break of structure, which was kind of good for me. Now I also doubted this fair value gap for some reason, thinking that it was not in the premium and premium price. So I introduced my Fib level also to be sure that I was doing the right thing. Then if you see from this level here, see that price actually came into the premium level. So I was selling from a premium price, which was actually interesting, guys. I was selling from a premium price above the 50% level, which is equilibrium. So I knew that this fair value gap is actually located at the right area, and it's actually a good one. So I'll wait for price around there. That was what I did after I saw this massive break of structure to the downside. So let's continue, guys. So furthermore, I went down, I took my entry here after I saw my confirmation. What is the confirmation? It goes to 5 minutes inside your POI. Like I always say, you see a shift in market structure. Now look at this. I always say that price will not always play out 100% in your anticipation. Now if you look at where I entered from this level here. This is supposed to be a a plus setup where you have a shift in market structure with an impulsive move, and you're actually trading back into a fair value gap inside a fair value gap on your higher time frame POI, which is actually nice. But you see how price ignored this fair value gap. It never came back to it. So I was just being skeptical too, because I had too many bad experiences where I had to wait for price, and price always snubbed my kind of my B2 POI, which are the low time frame POI. So once I just have the shift in market structure, I just pick my trades and use the most recent high to be my stop loss level. So that was what I did in this very level here. Now on the 15 minute, I also saw a possible second entry after I had this break of structure here, guys. This is a break of structure, guys, to the downside, which gave me another good confirmation that okay, we are still going to continue selling. If you look at it on the 5 minutes, it might be very, very good there. Okay, see, so I was not sticking the trade until we broke here. So as we broke this low, you can now break even down to trade your stop loss down into this level just for safety purpose. Then this is where we are targeting. Our main target is on the 4 hours. So since we have a break of structure now, we are very, very sure that we are in a bearish move. And where could be the possible place that price could return to? You also have to check those things out so that you can be in check in the market, so you don't freak out, you don't take some bad decision, which is this level here, where we have another fair value gap after this one. So I'm expecting price to come in here. If you see, I draw my box here. I don't want to see any other thing outside this box. I don't want to see price range outside here, but you can see price is actually struggling to reach in there. And this is as at 5:38 p.m. I'm making this video. So by 6:30, okay, there's a news by 6 o'clock, and I've been waiting for price to get to this low here. So I actually want to take profit around this level because I'm not too sure about the impression of the news. I don't trade the news. If you check, I don't really trade any news. So I always stay out from the market during trading or during news time. So I will just have to wait down to 5:50 p.m. then I'll close this trade, guys. So that's how I got this trade entry. Yesterday I was actually buying EU from that level, and today I saw a good break of structure, which also looked tempting, but thank God for some information I have known earlier on, and that was how I was able to catch this setup, guys. This is just Fvg, simple Fvg, guys. I told you this is what we use. I mostly use them almost all the time, especially from my point of view, as there are still other complex things you can use in the market, where you have your breaker blocks, your mitigation block, your proportion block, other blocks, and the rest of it. But mostly Fvgs are for second trade entry, just like those that missed, or just like me also that did not get an entry here on time, where I was supposed to maybe enter around there. I used this one to be like a second entry, and I was able to get price balance in this range, and now I'm selling. So that will be all for today, guys. Do well to subscribe to my channel and follow for more interesting ICT videos. I'll be taking more of ICT concept here on this channel, so that's the strategy I use. So do well to follow my XFS channel if you're not still following, guys. Thank you for watching to the end. Alright guys, welcome back to this video. Like, I just wanted to do like an aftermath of the video. This is 6:33 and the news have been released and it kind of went in our favor too. So after breaking even, like I told you guys, I was just going to wait to see what happened here. So nothing really happened with the news. Nothing really happened with the news. So we are just still trading down in favor. Like I said, we take our liquidity and mitigate this level and just close and check to see if we can get a new entry, or we'll just continue bearish downwards. So as for me, I'm actually closing this trade now because this is my targeted profit, and you can see price has taken out liquidity here. Price are taking out liquidity below this low. So that will be all on this setup. Thank you for watching to the end. Back to US 500, I used in the explanation. I used the 30-minute time frame where I was telling you guys that if I should see price break below this low, I'll be having a break of structure. Then I'll be having this inversion fair value gap to be a good one, which I saw on the, I think, 4-hour time frame. So when I made this video at that time, I was around this level here, and I was talking about this inversion fair value gap here. There's this inversion fair value gap I drew out, and I showed you guys that it will be only valid when price breaks below this old low with a candlestick body, closing with a candlestick body, in order to show you that we are now bearish. Then this will be our next POI. And if you see how price reacted to the imbalance, and so but later took off, but that can be like a kind of a trap for some people in the market, but that's not actually what it is, because we did not break below here. And imagine here we have a imbalance here, so on the 4 hours. So I was still saying that if price should trade down here, which is weak, and it can still zoom off because it's just like filling up the imbalance and taking off. So what would have made here a good point of interest was if price should close here with its candlestick body, which it did not do. You can see how price just stopped at this level and it went off, so the price was still bullish. So this would have been the break of structure to the downside. Then I saw something too on US, and since US 500, US 30 and US 100 are actually correlating pairs, I did something on US 100. I just want to summarize the live examples on Fvg and Ifvg. So if you check out US 100, it's really taking time to load. So if you check out US 30, actually it actually came in to fill up its own gap here, but on US 500 it did not actually fill up its own gap, which is quite okay. Now if you see something here, we have here how I got this entry. If you check on the 1 hour time frame, still using Fvgs, and you can see how the Fvgs work in the market. Price came in, fill up, pushed up, and if you check on the 1 hour here, you see something. You see that we have a break of structure here to the upside after a fill of inversion, a fill in Fvg here. Price filled up this Fvg. Price fills Fvg, created a break of structure, came back, fill up this imbalance also, and it pushed up a little bit here. Then now price retraced down to the other block, more than 50% of it. Now if you look very closely, this is an inversion fair value gap on the 1 hour here. So we are not expecting to see price go below this Ifvg on the 1 hour. Now if it's going below this inversion fair value gap, it is actually coming to mitigate this other block. So I can actually trade my stop loss to this other block here. So anything below this other block is a break of structure to the downside. Done. So this is the new order block in the market that is to hold this price. So if this inversion fair value gap doesn't hold the gap between both sides, this other block should hold it. So I'm expecting a push in price from here. But that will be all. I don't want to make more videos because if I keep on talking about Fvgs and Ifvgs, it's a whole lot of topic and I'll keep on talking and talking. So we have this to be a break of structure on the 15 minutes, then price retracing to at most the premium level or the discount level so as to buy properly. So this is actually the second entry. This is actually a second entry, which is perfect here. After I shift the market structure in BOS, you have a second entry. That is if price doesn't break below this other block. Price is not supposed to come below the 50%. 50% should be around here of the other block. Half of it here. If at all this thing doesn't hold it, and this and Ifvg doesn't hold it. So that will be all on the examples of inversion fair value gap and fair value gaps. So this trade I might not be able to wait out for the result as it's a live analysis because I would like to share the result, but for it I'm not going to be doing more videos on this topic. There are still many other topics I have to teach. So that will be all for the examples. At least I've made some point. I've shown you some good examples too in the past videos. Thank you for subscribing and watching. Just